We're all starting to see the insurance rates go up, and some states are seeing a 30% increase, and some are seeing even more of an increase. Well, today in car insurance, we're going to talk about what are the 6 reasons or ways that your insurance could increase that actually don't have to do with inflation. The first and the easiest one to know is that the location matters a lot, where you live, and that'll be some of the sub reasons that this happens. We'll go into more depth, but that plays a factor. So if you live in a large city, a condensed populated area, that territory is going to have a lot more risk involved for your vehicle. Same thing with your home as well. If you live in the suburbs where there's less population, there's less risk around you. So there's a lot less people that can cause an accident that are near you. That also plays into your commute. In a lot of cases, if you're outside of the city or inside of a city or whatever, vice versa, you're commuting longer distances. That can raise the amount of risk on the road. When you get to an office or get to your location, when you park your vehicle, the risk is a lot less than if you're driving on the road. More so for injury and property damage, so your insurance has a higher likelihood of paying. The further you drive, the worse it is. Now, don't get me wrong, not all companies care about that. Actually, about half of them don't even count mileage as a rating factor. I actually see that as a negative because in the majority of the policies that I've written in the past 12 months, almost everybody qualified for driving good, decent mileage, but when they tested their driving, they found they drove a lot less than what they thought they drove. So in most cases, if you're driving less than 10 miles a day to work, you're probably better off going with a company that is going to base it based off mileage. The second reason is actually cannabis. It sounds kind of weird, but the states that have legalized cannabis, and there's a ton of them, according to a Boston University report from 2000 to 2018, the cannabis-involved accidents were around 9% on average. They've since then creeped up to over 21.5% involvement in claims, especially with fatal accidents. So if you're in a state that allows cannabis, which a lot of us are, the likelihood of you having a higher rate increase mixed with your location, so if you're also in a high density area, if there's a lot of cannabis claims in that territory, then you may see that your rate might increase depending on that location and those that around you that actually have had accidents with cannabis. The third reason that your insurance may have gone up is because of speed limits. Some states have increased the speed limits, and I'm all for that, but there are known facts that the higher speed limits have a higher risk. According to a study done in Connecticut, that if you increase the rate of speed from 55 to 65, there's about a 3% increase in claims. Apart from that, there's also a 24% fatality rate increase with those claims. So the faster you drive, likelihood that someone's going to get hurt 24% more often than if you had a lower speed limit. Naturally, that's going to increase the cost of the liability portion. So when you add those higher liability limits to a policy, that portion of it is going to increase. I don't think it would necessarily affect the cost of the vehicle. So if you damage a car, then it could cause a little bit more damage. But I think the biggest factor that's increasing is that bodily injury limit. If you're not familiar with the coverages, I'll link a video here that goes in depth on what bodily injury and all of those types of coverages on a policy are for. The fourth way that your insurance could increase is the weather related in your area. If you are in an area that has higher weather claims, then there's a good chance that lately it's been worse than normal. If you look at Texas and Florida, for example, you guys have had a lot more claims, mainly on your homes and the roofs, but more so with everything in general. So the costs have gone up almost to the point where the government has to step in and start changing the way that the insurance industry is ran. Kind of crazy because the weather is also related to the 4.5 point. I didn't want to make a 7th, so we'll call it 4.5, which is the uninsured and underinsured motorists. These all technically fall into the location because when you go to a new location, you can't control the weather. You can control the uninsured motorists with the state, but you can't really control the people around you. So that's kind of a piece that you just don't have control over. The speed limit, obviously the government and whoever controls that is a piece of it. But in general, that location is a major factor. That's why certain zip codes or territories, as we call them, have a lot bigger price than other ones. The fifth piece is your insurance score. Now, I actually read an article which spurred this conversation from thesun.com, I believe it was. It's a news channel. And it talks about how credit plays a factor. And I have had arguments with coworkers that, yes, I think credit is very close to what's called an insurance score. Insurance score is a little bit different. If you want to know more exact of what an insurance score is, we're not going to go over it in this video. I'll link up the video where I just explain the percentages of what your insurance score versus your driving history versus what pieces cause an insurance score. But yes, an insurance score plays a large factor. It's very similar to credit. Most states have outlawed credit scores because now they need to factor in the claims history and all of that too. So that's where the insurance score came from. Unfortunately, the credit/insurance score does play a factor. Studies have shown that if you have a lower insurance score, you are more prone to have more insurance-related incidences. Now, they actually asterisk this, and it makes a good point that it's insurance claimed incidences. So that makes sense. Essentially, if you have a higher score, it's likely that you have more availability to money and cash, and you're more likely going to carry a higher deductible because you don't want to claim something unless it's major. If I had a low score, and I've been on the offense of both, right? I've had that where I've had to have a lower deductible and I outpocket more for the insurance because I can't afford to come up with a lot more income. Well, in this case, I've had friends that have called me up and said, should I claim this? And we go over the discounts and say, how it would affect your insurance. Most of the time, when the person that has the higher insurance score, they're likely going to fix the claim more often than the person that doesn't, just because they don't want to see the impact. And sometimes it's just not worth their time to go through all of the process to get a claim filed for something that's not as large as they want. So that does make a little bit of sense, and I don't think it plays a huge factor, but the insurance score/credit score will affect what you pay for insurance in most states. In the last piece, a lot of you don't realize, and no one ever thinks of this, but insurance is technically tied to the medical industry. Think of it this way. When the medical industry raises rates, doctors raise rates, medications go up, the cost of the material or the equipment at the hospital go up, the cost that gets charged from so-and-so to refer to this and that and investigations, all of that is something that your insurance pays. And when that's being paid, if you have more money going out, you naturally have to raise the increase that you're charging your customer. So the medical field is directly tied to the insurance industry without inflation. Yes, does inflation control the medical a little bit? Yes. And will that control the insurance? Sure. So inadvertently, the insurance company would be increased by the inflation of any medical industry. Once again, it could be location-based. Some locations don't have to charge as much for medical because they may not have those higher risk people there that they have to have certain equipment for and certain charges and certain doctors for. So in those cases, the insurance companies wouldn't have to charge as much. The biggest question I have is, what are your thoughts? Do you think that the insurance companies don't charge as much for those scenarios, or do you think they're just charging as much as everybody else because they can? That's one thing I would love to have in a report, that the insurance companies would have to report that, okay, in this specific territory, the rate has to be this based on the situation. Now, they technically do have to show rate increases and decreases for certain territories, but it would be good to publicly notify each customer of the reasons or the factors that are affecting your policy. Let me know what your thoughts are. Have you seen this to be true? Go ahead and leave it in the comments below. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.